it's a hip ace. So there was something that jumped out at me was they had the chief financial regulator of Dubai gave a speech. He was an Englishman by the name of Ian Johnson, and he basically said that STOs would be fantastic for him. There's, as far as he can see, there's no downside to them from the point of view of financial regulations, because it would mean that if there was an immutable blockchain that all transactions were on, he could just look back through that blockchain and see exactly where the money came from. So he reckoned there'd be no bar to STOs coming from the regulatory side. The whole thing would be from the technical side or the technological side. Can they get the technology in place? Okay, so that was one thing, and then another person there was this woman from Deloitte, and auditing was one thing, and then another person there was this woman from Deloitte, an auditing company, big auditing company. I'm sure you've heard of them, and she was saying that the big institutions haven't jumped in yet to actually put the technologies in place, or to put themselves to trade STOs, or to offer themselves as STOs, just because nobody wants to jump in first. They want someone else to jump in first, make the mistakes, so then they can come in behind, and it'll be with much less friction for them. But they are working behind the scenes, internationally, to try to get the regulations in place and just try to get the technology in place. So it seems that STOs are just a thing that everybody wants to work, wants to get working. A lot of smart people have already invested a lot of time and money to make them work, and really, it just seems like it's a matter of time before they do work. I can't see it not coming to fruition eventually. The only question is, how long will it take? Virtually everybody thought it's going to be like about 2 years before they're up and running. Like, there are exchanges coming online now this year, and next year, but it'll be maybe 2 years or so. And then some people thought it'd be longer. It might be 5 years, 10 years before the whole thing was really up and running. And but like, that's 10 years was like the longest estimate. So anyway, that's from 30,000 feet. That's my view. Can I go into? Unfortunately, James is the guy that sort of knows the detail and the ins and outs of it, because I'm not really that much of an expert on STOs. One thing that jumped out at me as well was for somebody like company website called Cointelligence, and it's a review website. It's been reviewing ICOs and STOs. For the last year or so. It's been set up by this Israeli by the name of On Yavin, kind of a strange name, for strange first name. But anyway, we met him there at the conference, and he seems like a pretty well put together guy. His background is in mathematics, and he is an angel investor, and he's has set up this website. And he's funding it entirely himself, so that it won't be it won't have any conflict of interest. He's reviewing STOs, and he's not accepting money from the STOs themselves. He said he's had a lot of interest from and he's not accepting money from the STOs themselves. He said he's had a lot of interest from people saying, "Oh, can you put a review on your website?" But if the review was only getting 4 out of 10, we don't want it up there. We don't want to pay you. He's there. Well, look, the review's going up. We don't accept payment, and if you want a better mark, we'll show you exactly what you need to do. But yeah, so that's really, if you want to find out, I'm definitely going to be looking up Cointelligence. They're definitely going to be on my bookmarks for deciding whether an STO is legit or not. He broke down the whole thing. You can actually there's a he's got a YouTube video up where he pretty much gives the same presentation that he gave to us at the Yeah, so he showed one of his main points was that the media last year knew absolutely nothing about ICOs, and they would even CNBC, other big media outlets were promoting ICOs that were actually total and complete scams. There was one ICO that was a data compressing software, and it didn't work at all. But they were saying it was legit. So the point is that if the mainstream media knew nothing about ICOs last year, they hardly know anything about STOs this year either. And you just need to be aware of that.
Someone heard me?
Yeah, I can hear you now.
I made it. All right, sorry, carry on.
So that was Cointelligence. Yeah, I can hear you now.
I made it. All right, sorry, carry on.
So that was Cointelligence. They're definitely ones you need to check out. The other thing was as far as things that are up and running right now, SEDEX was one that had a lot of interest, and they were a diamond. I'm not just sure what you call them. They're not exactly an STO, because what they're doing is they're selling fractional shares in diamonds on the blockchain. So you could buy, say, a piece of a share in a diamond, a 1 carat diamond or a 10 carat diamond or whatever it was, and that would be in the form of a token that's traded on the blockchain. So it would make diamonds liquid, make diamonds into a liquid asset, a fungible asset like gold. Whereas at the moment, he reckoned that it was going to make diamonds be as big a potential market as gold, maybe 350 billion a year. Yes, which would be pretty huge. He thought the diamonds were even better than gold in one respect, that you could choose your risk profile with diamonds, because if you buy, say, a 1 carat diamond, that's got a low risk profile because there's many of them and they hold their price fairly well. If you wanted a higher risk profile, you could buy a share of a much larger diamond where the price fluctuates a lot more. So he thought, well, he was reckoning that diamonds were going to possibly eclipse gold as a fungible asset.
It was definitely an interesting presentation on the diamonds. I think the big challenge that I saw with it is the private algorithm that they use. So basically what they do is they take diamonds, which obviously 20 different things that you need to look at, different elements of purities and the like, and they flatten it onto a single 0 to 1 scale. And I guess the challenge of it is what they do is they have this algorithm which they don't make public. So it's a proprietary algorithm that establishes, based on however many years worth of price data, what all of along from 0 to 1, what every diamond is priced at. They call it the EMV, or estimated median value, or something like that. And the issue is that I can't see what the price discovery looks like, because they basically say this is what this diamond is worth historically, and then people can either bid higher or lower than that value. So if you want to offload diamonds, you can put your price lower and it will show up as the first one to buy. If you're looking for more profit, then you put higher. But I just don't quite understand how the price discovery was to work. But I think there was a few comments that will allow you to just say, well, this is the mean value of diamonds based on our special algorithm, and there was a limitation of trust there. That was certainly a challenge I saw with the project.
Okay, so basically by price discovery, you mean that because every diamond is unique, you don't know what the value of that diamond is until somebody actually puts a bid on to buy it.
Yeah, and if you're putting up bids that are 5% higher, 5% lower, it's very rare that a buyer is going to be going higher than the mean price. I mean, diamond's not the kind of thing that you want to just rush out there and buy at full price. You tend to be looking for it as cheap as you can. And when I asked him, when I did probe the question, he kind of deflected away from that topic. So I think the model works very well if you have diamonds and you want to sell them. I don't think diamonds it works so well if you're looking to invest in them. But if he pulls it off, if they do actually build that platform and it works, it was certainly nothing I've ever seen before. But if he pulls it off, if they do actually build that platform and it works, it was certainly nothing I've ever seen before. So if it works, it could very well be a new instrument to rival gold. I'll be sitting keenly on the sidelines to watch and see how it pans out, I think.
Right. Okay. Yeah. So you don't see it really as being a currency because of the price discovery problem.
I think I need to see it in action. I think once we kind of get a bit of a demonstration to see how it works, I think then it would be it almost needs to go live first so we can really assess what it looks like. But I do think that there was, and I was talking to another bloke, the grey area about what the proprietary algorithm that prices diamonds, whilst I don't believe that they would have done anything fraudulently. I'm sure there's plenty of science and statistics behind it. I feel like you need to make that kind of thing open source to allow other competitors to view it, and you need to make that kind of thing open source to allow other competitors to view it and people to say, yes, we do agree with your system, or you've weighted impurity X more than it should, or whatever else.
Yeah, Dylan was saying that the problem with making it open source was that was the product to a large extent.
Yes, I think,
source, you could someone else could just copycat it straight away.
Yeah, I think of the $20 million they raised, 17 of it went towards developing the algorithm. So I think they're going to hold that one pretty tight.
Okay.
I think just in terms of STO overview, one thing that kind of struck me, and I've put some of these things into the minutes, but one of the things that really struck me is what I guess the reason why the STO space is developing traction. And they showed us some charts at the very beginning as to what actually grows the GDP of particularly the US and the UK.
Yeah.
And it was the tech stage, in particular from technology companies, are driving something of the order of, it was like 50 or 60% of GDP comes from these high-risk tech startups when they finally just go off, which is what we saw with the FANG stocks, right? At one point, they were a venture capitalist seed phase, and now they account for an enormous portion of the NASDAQ and the US economy. And they were basically saying that that's not actually where all the money goes. So whilst you have these high-value tech stocks in early phases, the money doesn't go there initially. It really is high-risk venture capital type projects. But that's exactly the kind of space where STOs sit in. It's actually allowing the public to get their hands on early age VC level seed phase rounds that genuinely do build the enormous dollars later in the piece. But at the moment is not where traditional money is actually flowing. They're going into the well and tried and trusted public companies. So I thought that was an interesting kind of stage for the STO platform.
Right, so that could be quite exciting. That could make investment itself a more efficient thing. You'd be putting money where it's actually going to create growth in the economy.
Absolutely, and I think what was interesting, they had a chart up that was showing what the traditional VC model looks like, and basically you've got your entrepreneur who's got a good idea, you've got your VC who's providing money and guidance in exchange for equity, effectively. And then on the right-hand side of them, you've then got the investment banks. So the investment banks fund the VCs then fund the project, and in exchange for that, the entrepreneur basically hands over their soul and half of their equity. And what the STO model basically does is it completely lops off the investment bank side of that thing. So the VCs, like Spice, can now tokenize themselves, or they can tokenize the entrepreneur's idea, or both. Which is exactly what we're seeing Spice VC doing, where the investor who is, as we saw in the ICO boom, willing to take on more risk and wants to be a part of this previously inaccessible space, which has the maximum amount of growth, it's now allowing investors to go straight to the entrepreneur. The entrepreneur gets to keep their capital. So the two real, I think, take-homes for why the STO revolution is important is the entrepreneur or the startup gets to keep their equity. They get to remain private. They're not beholden to an investment bank. And investors or the general public now have access to the high growth stocks that were previously the playground of the rich. And I heard over and over again that STOs won't work if they are issuing to investment banks and the big dogs. It just doesn't work. We've already got legacy systems that do that. The entire STO ecosystem, the resounding sound is, this is for the public. This is not for the institutions, because that's where it already is. Why would you change it? It really is not for the rich. This is actually trying to get the public involved in these high growth technologies.
Right. And because, of course, the ordinary retail investor, he's got a much higher risk tolerance than the investment banks or even the VCs, because he's only putting a small amount of money in. A lot of times he doesn't really matter. He doesn't care if he loses it. He's willing to take the risk. If it's a project that he's interested in. We've seen that with Kickstarter. People were throwing money at Kickstarter just because they were making some new widget, and they were given that support in spite of not receiving any equity in the company at all, just in the hope that this product they were interested in might one day be created. So the STOs can really kickstart these entrepreneurs.
And as you mentioned, everybody really wins here except the investment banks, because the public gets access to these startups. The entrepreneurs get to keep their capital and get access to investors. And I think the concept that I heard was that you can get one big bill from one single investment bank, or exactly what we saw with the ICO, you can have 50,000 people from the public aggregating to reach that same amount of input. And that's really what it's all about. It's about, instead of having one single investor, you've got multiple doing smaller amounts, but collectively aggregating to a full-scale investment structure.
Right. It says here somewhere, I have a note made here that the STOs will cut the cost of, they undercut a bank's cost by at least 40 or 50%.
Yeah.
Yeah. Implications: 40 to 50% of the cost of a bank can be eliminated through STOs.
Yeah. And you get these multiple pools of liquidity where you get the VCs that can tokenize themselves, the entrepreneurs that can tokenize themselves. And, once you get the public involved in this space, you could end up turning investors into issuers. Someone's got a good idea, realizes it's actually quite achievable, and away they go. And one thing that I found quite interesting about this conference is, and I've never actually seen this before, and granted, I've never been to a conference that was quite like this, but every person that was on stage, whether they be a developing exchange, whether they're building an issuance platform, or they're a VC or even a regulator, is basically saying that the only way this works is by empowering the public. And there is so much of the world that will be tokenized in the future that there's A, room for competition, but B, we've only got one shot at this, and everybody wants to work together to build the base layer infrastructure. And they were absolutely adamant that we are in the early phases of building that base layer infrastructure, but they're all working together to reach that common goal. And the idea is that we can basically sit there and watch this thing get built, where you don't really have the same competition that you would have in a traditional structure, because there's A, room to support it, but B, if they get it wrong, if the STO industry gets it wrong, it won't exist. So it was quite interesting to see that level of cooperation at this early stage, where everyone goes, look, we're working towards a common goal, let's do it together.
Yeah, everyone's got something to get out of this, except maybe the investment banks. So
exactly.
when there's something like that, it's going to happen. The investment banks can't hold it back.
Yeah, and there's an absolute, they were basically saying that we've obviously seen a lot of the Securitize and the PrefLogics and the Polymaths who were kind of the issuance. So that's how you go from startup to token. What they said is still in the works is the exchange infrastructure. So once you get those tokens listed on an exchange, how do you make sure the right or the wrong people are operating in that space, and who can and can't buy that token? How do you manage that level of compliance? And then also the back end of that, which is all the clearing houses and other systems that exist in the traditional markets, all the broker dealers and everything there. It was quite clear that they need to keep that as familiar as humanly possible to the traditional sense, because bankers and the traditional finance world really doesn't want to touch wallets. They don't want to touch buying Bitcoin. They don't want to touch any of these new systems that, quite frankly, are complex. User interface is pretty terrible. There's just so many things that can go wrong, and they just don't want to touch it. So the idea is to build it to be almost the same as the traditional world today, to actually facilitate that transition.
That's where the technology comes in. That's where they're saying the technology, just the nuts and bolts of actually getting that to work is really the only barrier. Well, we've also there's the legal framework and the accountability that has to work throughout. The whole world, I suppose, has to come together on that. But there are certain countries already that have the legal setup in place, or at least some of the ICOs have already got themselves set up legally in places like Liechtenstein and Malta. So we're seeing the beginning of it, of that already. But it was I think someone said it came down to a trust issue. I think there was the woman from Deloitte. It's about getting trust built into the system, proving that it works. And then once it's proved that it works, once there's trust, then it'll take off very quickly. It was like with credit cards, even were like that initially. People didn't trust them. Then it was like PayPal. People didn't trust PayPal. People didn't trust the idea of buying things off eBay or through the internet. So, but once the framework is in place, and then the trust is in place, it'll skyrocket, quickly.
Absolutely. And I think what they said about the biggest barriers, it was, as you mentioned, the nuts and bolts of the clearinghouses and the back end of exchanges. But the other one that kept coming up is not regulatory crackdowns. It was regulatory uncertainty. We're just kind of in that fluid phase where we're not really sure who's going to make the first step. We don't really know what it looks like. The regulators are totally on board with this, from what we heard from those the panelists.
Yeah.
I mean, this is great technology for them. They've got fully traceable, auditable, digital ledgers of every transaction. This is an absolute dream for the regulators, and they're all on board for it. But as Tyag said, the UKs and the US, they don't want to make the first step because they kind of want to let someone else go out over the top first. Take all of the intricacies and the things that go wrong. They want to see that play out. And as Tyag said, they want to sit in the background and make the initial decisions, but kind of follow up at the end once they've seen what all the pitfalls are, fill those in, and then it'll be all guns blazing.
I mean, when you think of where, say, Bitcoin was 10 years ago, nobody really gave Bitcoin, the time of day. It was just laughed at, certainly in the media. Oh, this funny little thing, this funny little digital currency for nerds. But now with the STOs, I mean, if there's high level people are putting like a lot of time and effort into it and taking them very seriously. So although it's a lot more difficult to get STOs to work than it is to get Bitcoin to work, because Bitcoin, I suppose, it worked, I suppose, pretty much from day one. I think this has got it can be a lot bigger than Bitcoin, because I mean it's nothing less than putting every asset in the world almost quite potentially on the blockchain. It can be bigger, and there's a much stronger desire to get it to work because of that, because it means accessing liquidity that at the moment can't be accessed.
Yeah, exactly. Another one that I thought was interesting that they were mentioning fairly frequently was information asymmetry. So if you look at these tech startups or the people in the STO space, if you've got blockchain experts, as far as you can be in the space, they're highly technically focused. But what the STO is actually the blending, and it's actually much, much closer to the capital formation markets than the blockchain space. And the term evolution kept getting thrown around as opposed to revolution, because it's not really a revolution in the way that blockchain is. It's more of an evolution. It's almost like an upgrade to the software of the systems that the legacy trading systems and issuance IPOs and things actually work. So it's more of an upgrade to the technology as opposed to a complete paradigm shift. You would argue that Bitcoin to cash or to fiat currency is more of a paradigm shift. That's arguably a revolution because you've now completely changed the distribution method. But for the STO, you're just taking things that are investment vehicles and putting them into a better way to actually transmit, trade, and track that data. So that was something that I definitely came up against. So there's that educational side to things, which is you've got tech and you've got capital markets, and the STO is somewhere in between. And it's very rare to find somebody who's technically focused and capital markets focused. You normally have one or the other. So there's that kind of link that needs to happen. And then there's the complete shift between retail investor mentality and institutional mentality, and then the VCs that sit somewhere in the middle of that. And how do you actually get the level of information and knowledge that the VCs capture, that investment banks capture about risk and everything else? How do you kind of translate that across and put that level of trust into the retail investor? So that was, getting that information and education correct was a key point that got brought up by a number of different parties. And I just couldn't help but think that what we've kind of got here with this forum where we're all kind of working it out is arguably, I think, at least from the conversations I was having, I'm not entirely convinced that there's anything quite like this floating around. And I think that's something that's, we should all be pretty excited and pretty proud about.
Yeah, we're certainly on the ground floor. This is where I would have liked to have been with Bitcoin 10 years ago. Except 10 years ago, you wouldn't have had the knowledge. You wouldn't have had a group like this, I don't think, to share out the research load and to confer about things that we've discovered. One little stumbling block there that still is there at the moment is that the UK has more or less said they're not going to go ahead with the trading of derivatives based on STOs at the moment. I'm not sure exactly what the organisation is over that, but I just read an article there saying that the UK government had given the UK financial regulator, I think it is, the authority over STOs and ICOs, and it had said that that regulator says that they're not going to go ahead with trading derivatives or on a derivative exchange at the moment for the foreseeable.
Yeah. I think they actually just released, I think it's the FCA. They actually just released the other day it's basically a paper, and I've started reading it, but and if anyone is interested, it's actually probably not a bad thing to get a hold of and just have a look at it. But basically it's a document that's asking the industry to say, look, we saw this ICO thing, we see this Bitcoin thing, we understand, and from what they've written in the document, they do indeed understand. We understand what a paradigm and change shift this all is. We are interested, we're cautious, we want to understand it more, and they're basically asking for comment from exchanges, from the Binances of the world, the professional traders, institutional banks. They're basically asking everybody who knows anything about capital markets and anything about blockchain to put forward a commentary and actually say, well, this is what we agree with, this is what we don't agree with, and this is how we think that it kind of fits in your parameters. So they're currently going through a process of requesting from the public and private sector, what do we do? This is our idea. This is what we think it looks like, to which I think they've done a pretty good job. Where do we go from here? What are your thoughts? So it's the wheels and the cogs are definitely in motion. And I think another thing that was just blew me away is the conversations we're having here were pretty much spot on, and I would argue on the cutting edge of what we heard at the conference. We picked up a few nuggets here and there, and I think in general it kind of put a lot of clarity to things. But what we've been talking about in this forum is pretty close to what's going on, and I think that's pretty exciting. Yeah.
One other little negative thing is that before I go into the conference, I think I had a little bit of a slightly too rosy vision of where STOs are as of right now. So I was thinking, this could mean that, say, the goat herder in Pakistan on his Android phone would be able to, for maybe a few dollars, to buy a share, an STO in maybe an apartment building in Manhattan. but there was, maybe that'll happen someday. That's the dream. But as of right now, there was a real estate SDO company that might have been Crowdlet Token. I'm not sure
Crowdly
exactly.
Token, yeah.
And they basically they said that their minimum, they're a real estate investment. That's it. Yes, I have them here. Their minimum investment is 100K. So if you want a share of an apartment in Manhattan, it's 100K. $100,000 is what you have to come up with. So it does put the goat herder in Pakistan or out of the picture a bit. But at least, you know, it's something that'll be up and running. I believe you could probably you're going to be able to invest in them either now or pretty soon, but it'll be like a year or before it's actually, there's an exchange where you can actually trade your real estate STO. You know, it's still the fact that it is actually working. I mean, it's not quite the democratization of assets that I thought it was going to be yet with real estate, because 100K is still out of it's still out up beyond the horizon for a lot of people, saying the third world certainly, and most people in the developed world as well. But well, it's better than it was. Like, we're certainly moving in the right direction.
Yeah, the cogs are definitely in motion, and you know, it was very, very adamant that we are in the base layer technology phase. We are building up the foundation of how this whole system is going to work. If you look at Open Finance Network, you can all vouch to this. I mean, the liquidity just doesn't appear because it's an STO. So there's going to be a phase of, you know, stagnant on these exchanges, if the exchanges exist for a good period of time, until you kind of have to get to that exponential point when suddenly liquidity starts pouring in. And that's a function of when the institutions feel comfortable with it, when are the custody solutions in place, when does it go through the media hype cycle that actually gets retail investors going, oh, right, so I can invest in a VC now. You know, there has to be that initial, I guess, distribution of information to say, look, this is actually a new thing. Blockchain is not about sending money to criminals. It's actually a completely different thing to Bitcoin. You know, there's a lot of information and education hurdles that need to come across both for retail, the public, and institutions. So there's a lot of things going on. But again, we're kind of in that sweet spot right now where we're just watching this thing unfold in front of us. And we're definitely in the right place to be getting a pulse on all these things, which is really now where we're just watching this thing unfold in front of us. And we're definitely in the right place to be getting a pulse on all these things, which is really, really good news. And one thing that I wrote down in my book that I thought was just fascinating is the amount of people that mistakenly said securitization when they were trying to say tokenization.
Yes.
And I can't help but think securitize is that's almost like a Hoover moment. So I think they're going to reap the rewards from that for a long time if that's the way it's going.
Yeah. One thing worth mentioning then at this point would be about when to invest. The what now it would be different for every STO, of course, but the one thing that was shown was this fairly gnarly looking hype curve of STOs, and it pretty much, as of right now, it put us at the top of the ski jump. So basically, we're at the STOs are going to be like heading downhill, like at a rate of knots throughout maybe the first half of this year, maybe all year, and then they're only going to come back up to lower than they are around 2020, 2021, 2022, and from then they'll start taking off. That's STOs in general. And I don't know if that holds true for, you know, any particular STO. Maybe it doesn't, but it's just thought I'd mention that.
Yeah, I think I would agree with that. I think what they were basically saying is don't come expecting a moon mission. It's going to be a period of technology building because, you know, as they were saying, we've got one shot to do this. If we're going to disrupt the traditional investment arms and actually separate the investment banks from these early phase VCs, because to a VC, they would much rather go to the public. There are numerous advantages to going to the public. The STOs rather go to the public. There are numerous advantages to going to the public. The STOs work for pretty much everybody except the investment banks. And in order to disrupt those incumbents, it's going to be some tough years. But when it goes, it's like Bitcoin, right? Once the cat's out the bag, you can't really put this thing back in. And there's some very, very clever minds working on making this all happen.
Yeah. But we're some of the educated public. There's a lot of things. There's a lot of new kind of concepts like coming up at around this time now. That we just haven't, that really no one has even thought of before. Like certainly new products at least. Like, so for instance, with a Crowdly token here, and their minimum investment is 100K. So then when the way that works is you have a share of the STO. Then in order for the building to be, then there'd have to be some sort of a voting system in place so that the shareholders could decide when the building was sold. And you'd have to decide how you decided what constituted a vote to sell. Is it the number of people that vote? Is it the size of each person's holdings? I suppose those kinds of things have been worked out before, but they never on the blockchain in the same way. It just kind of struck me that there's a lot of things to be kind of sort of worked out and ironed out, even with individual projects. But certainly it can be done. I don't imagine any actual barrier to stop it from working. I'm sure that's just all about just contracts and agreements.
Yeah, and it'll be interesting. I mean, that's where I think the competition side of things comes in. There'll be different real estate market, different providers, and it'll be interesting. I mean, that's where I think the competition side of things comes in. There'll be different real estate market, different providers, and they'll all have different approaches, different parts of the world. So that'll be where that competition really comes to light. While we're here, is there any kind of questions from the floor? Any thoughts people have on what we've kind of gone over so far?
One other concern that they had here is they need to put good things in the wrapper. But these STOs is basically a digital wrapper for assets. So as you're saying, it's an evolution, not a revolution. But if they want people to get interested in it, they just have to make sure that they're actually putting things in this digital wrapper that people want. Not everyone wants to invest in malls, they said, because they're not. It's just not a very. Some investments are not that interesting. They're not going to grow, that quickly. You just need to be aware.
The general feel of this thing is entirely within the SEC's ballpark. Whether they change it, whether they start looking into the accreditation process as a result of this, it could be that the STO space is a catalyst for them to start considering it. It could be that the ICO was the initial consideration. This is definitely something that it does sit with the regulators in that case. So it's I think that's something that whether that occurs come 2021, whether they start seeing this hype curve kicking off is it's all a bit of a question mark. But the general feel is that that's a waiting game for that one. I saw something about Apple digitizing their stuff. It was as Apple Tesla. I to be honest, I haven't followed it up, but I know I've seen a few articles. It was looming.
As for an investor accreditation, my basic understanding was that this is going to be investor accreditation. My basic understanding was that this is going to be pretty democratized. You weren't going to have to be an accredited invest. Oh, wait a second, this is America. Okay, right.
Yeah.
America. Okay, right.
Yeah, but I think something to take satisfaction is that the STO industry absolutely knows that this is not for accreditation. This is for everybody, and there is no point for STOs to exist until you're issuing it to the general public, because the idea is that the efficiencies, the automations, the smart contracts allows you to do everything. And this blew me away. They explained that the current securities market basically operates off spreadsheets, which just melted my mind. I couldn't believe that was still the way we do things. But the idea is that the STO is going to replace the spreadsheet, and that now allows spreadsheets. Good Lord, that now allows you to have 50,000 or a crowdfunding level of investors who can all be contacted, can all be notified. all of the what's it called? All the regulations, all the things that these companies need to do to keep their investors in sync, you just can't do with a paper system. This is targeted towards the little guy. This is not for the big players because the legacy systems already do that very, very well.
Okay, so there's no way around TOs. In other words, if we want to have this to open the market up to all the small investors, it can't really be done another way.
No, I think that'll be the SEC. They've got to make their call. As you mentioned before, I think they're sitting back and letting the first man go over the trench. They do anything too savage. Yeah, exchanges, be it issuance platforms, basically the entire STO industry is very, very aware that they all face the same existential risk, and that is that this thing could never take off. We are attacking, in theory, we are taking the fight directly to the investment banks. Everyone else wins, but the guys with the big pocketbooks are in a very, very risky position at losing their stranglehold on this market. So, and I'll post up the diagram that they showed us, but basically they are providing the VCs of today with their funding. So there's, if we're going to disrupt that, the actual STO industry itself is working together to achieve that. Focusing our current research efforts, I think, on that infrastructure level, the issuance platforms and the exchanges. There'll be a few to do with compliance and everything else, but and the SPICE VC. So I think that the venture capitalist space, where the safest bet is, if you start investing in things like there was one early today that was talking about an STO for art, and there's some for real estate. I think what you're then doing is you're compounding your risk, because you're risking, will that company be successful in the real estate or the art market or whatever their niche is, but you're compounding that with the risk of what if the STO space doesn't make it in the first place. So there's a higher risk to a niche market, so smaller rewards. So at the moment, at least in my eyes, I think trying to go for pure infrastructure plays is really where the value is, and I think the value in terms of risk to reward sits. I don't think that the actual STOs themselves, if we're 5 years or 3 years away from this being a thing, I'd be waiting for the STOs that are issuing in 3 to 5 years.
How close are we to being? How close are we to being having a good time to really to invest in place things like Spice and Pref? Is it a good time now? How can we?
Look, I think at the moment it's one of those things where we kind of have to keep our eye out for where the opportunities are. So, for example, PrefLogic is a case where they're building a platform which, as far as I can tell, is as good as any of the other major players. So their offering is today. It's one of those things where if they don't do an offering tomorrow, or if they do an offering, there's a high chance it'll be worth a lot more than what it is today. Things like Spice VC, I mean, that's where the secondary market comes into things. So Spice VC, you can buy and trade on OFN right now. And, whilst there's not much liquidity, you can get in and get out. And that's really what this is all going towards, the ability for people to get in, get out. I imagine that get out. And that's really what this is all going towards, the ability for people to get in, get out. I imagine that the liquidity will change very quickly. Even today, I kind of watch OFN because I'm curious myself how much this space is building up momentum. And I'm starting to see orders coming in, relatively small orders, but starting to compete with each other over a couple of cents here and there. So it's still extremely small, but it's starting to move. It's starting to grow. There's people coming into the space. So I think it totally depends. There's some like I think Tokeny was the other major issuance platform that was at the conference.
They sponsored it.
Yeah, they were sponsors, and to be honest, their product looks good. They're going to compete with Securitize and PrefLogic. They're about on the same order of magnitude as far as what I could see. But I don't know if their equity is available for you and I to pick up at this point. So I think it's one of those things that we kind of need to just keep an eye out for where the opportunities are and making those decisions as we go, because we don't know when they will or won't show up and whether secondary markets will be available. Harbour wasn't there, although Harbour was mentioned by a number of parties. So Harbour seems to be the other one that people are keeping an eye on. Harbour and it's worth noting that Spice VC, Army was there from Spice, and we had a quick chat with him towards the end of day two. They continue to consolidate their position as some of the real forward thinkers in this space. I just think that those guys, and we spoke to another bloke on Yavin who Targ mentioned earlier from Cointelligence, and he said that he knows the three of them personally, the three founders of Spice, and he goes, they are absolutely the right people to be doing this, but the challenge is, have they bitten off more than they can chew, and can they actually pull that off? And I asked him, I said, is that a risk that you believe is intrinsic of Spice, or is that the whole existential risk that the STO space doesn't take off? And he said the latter. So if you believe the thesis of STOs, my gauge on that is that Spice VC is they're pretty much first and foremost when it comes to cutting edge in this space. So I think we should be closely following what they're up to.
Yeah, I do. I was there. I was standing there when you were having that conversation with Owen. He certainly he certainly seemed to believe in them, and he's a guy. He seems like a solid guy as well. He seems to know what he's talking about. So I would definitely. I'm most interested in Spice VC as well for that reason.
And it was interesting. Army gave us a bit of a nugget, so I posted up. Archax was another one of the exchanges that was. I think they were a sponsor for the event. Their exchange didn't necessarily blow me away, but they're out. They seem to know what they were talking about. So that's definitely one that I need to that we should look into a bit further. And Army mentioned Onera, which is one of his brainchilds, and basically it's a blockchain that he intends to replace Ethereum in the STO space. It's a blockchain or a distributed ledger that they're building specifically for the STO space, and the idea is it can contain data and information that's inherent to those assets. And you also have proof of ownership. So basically, how do you prove at the moment? You may own a Spice VC token, but how do you actually prove that there's anything behind that token? And the idea is that on this Onera blockchain, you've got regulated authorities who actually say, I can absolutely confirm that there is this particular house or this particular commercial property backing that token. Is this particular house or this particular commercial property backing that token. And that piece of proof is also written to the blockchain. So it's almost like you've got proof of ownership of the investor, but also proof that the asset is actually a real thing that exists and all of the backing is there, also written to an immutable ledger. So that's really what Onera is trying to do. And it was basically a response to the fact that Ethereum requires a whole stack of complex coding to fix that problem today. You're basically building on something that was not really designed for STOs. It was designed for sending value with a smart contract. So whilst I think that there's still a big future for the Ethereums of the world, let's not lose track of the fact that there could very well be additional distributed ledgers coming out which completely supersede it simply because they were designed for the purpose.
What about the problem of 51% attack on a smaller blockchain? I've got it written down here somewhere that only BTC, only Bitcoin could be the backbone for STOs because it's too big to be susceptible to 51% attack.
Yeah, I guess it depends on what how the distributed ledger is built. And this is where the differences in consensus mechanisms. What's their spam resistance? Do they use a gas model? Is it free? What's the actual? Is it a DAG? Is it a blockchain? Is it something that we have never seen before? So I need to read more into Onera, but I think if anything was going to be built specifically for the STO space, I would be extraordinarily to be built out of it because no market would ever accept that level of existential risk.
Right. Yeah. As far as deciding now, you've got between which of the, as we were calling them, shovel sellers to be more interested in between Tokeny, Pref, Logic, Securitize. What do you like? Which one of them do you think is or VC, Spice VC? Which one do you think is the most is the best option?
Well, I mean, I think at the moment, I think that I mean, in terms of the issuance platforms, which the forerunners that I have come across seem to be Securitize. I think Securitize, Tokeny, PrefLogic. I have not heard of anything about PrefLogic outside of probably this group and other areas, and that's not necessarily saying that they don't exist or a potential high class competitor. It's more so that their marketing group and other areas, and that's not necessarily saying that they don't exist or a potential high class competitor. It's more so that their marketing has been practically non-existent. So I'm extremely keen to watch when that happens, and when Pref does start finally marketing, are they going to start appearing at these events? Are they going to start appearing in people's lingo? Because at the moment they're just not visible, and they definitely need to. I know that's been by design, but we'll see whether they pull that one out. But yeah, look, I mean, Securitize seems to be the one that's on everybody's lips, and that's basically Spice VC. So I think, and there's a few other issuance platforms that Spice has got their eye on. So again, I think it adds more fuel to keeping track with what those guys are doing. Are there any other questions or thoughts?
On the second day, I went. On the third day, actually, I went to this 11 conference, and it was all about China liaising with projects in Europe and America to bring them into China, and it was basically it was the idea that if you want to get into China, you're going to have to work with Chinese companies. Because the guy, the founder of B Token was there. I forget his name, but he was saying that Chinese people. It's not just the Chinese government, but Chinese people themselves are so nationalistic that if you don't have an office in China, if you're not working with a Chinese company, if you don't have like some sort of a Chinese label on your business, they'll just ignore you completely, and they'll just always invest in the Chinese.
Is that right?
Yeah. So that was that's what that entire conference was about. It was about liaising between China and the Western world. But China's it's a massive area. It's a massive market to get into. So already that's starting up as well.
Yeah, that's pretty interesting, isn't it? Cryptomania, I think at the moment, ignoring all the ones that you can find on CoinMarketCap, because I think they're all accessible to everyone else. Pref currently has their offering floating around, securitized via Spice VC. I haven't seen any others in terms of getting in for private equity, and this is why I think it's so important for us to really keep our fingers on the pulse and also get that business development side going, because these opportunities could be far and few in between, because really this is VC territory. And I think what we will actually see is scanning Twitter, seeing the guys that who from Spice VC, who are they following, who are they responding to, keeping an eye on what these VCs are actually doing, because I think what we'll find is there'll be more and more VCs tokenizing themselves, and thus it provides us with an access into these platforms as a basket, similar to Spice VC. And yes, overstock is something to keep an eye on. I don't think that's something that we should ignore, because if T0, which I think is now worth more than overstock, does a reverse takeover, that would be something to watch.
Even Coinbase is going to start up with STOs. Maybe sometime this year, and what they're going to do is they're going to be buying up smaller exchanges, that STO exchanges that already have the legality sorted out, and they're going to be trading through STO exchanges that already have the legality sorted out, and they're going to be trading through them in order to speed up the process. But I suppose Coinbase isn't. I don't know if you can even invest in it. It's probably not as exciting an investment because they're already kind of pretty big. But anyway, the point is they're the biggest pretty much, and they're moving into STOs as well. So you'll be able to buy STOs on Coinbase pretty soon.
I think that's just about everything that was on my list of things from the conference. One other interesting nugget is they did mention that stable coins are a necessity. Which one it ends up looking like, whether there's multiple of them, but for obvious reasons, having some kind of stability token in the mix is something that we can reliably expect. Yeah, and actually the other thing that they were mentioning is that in order for this space to work, the companies that are performing STOs and the companies that are actually tokenizing themselves, they really need forming STOs and the companies that are actually tokenizing themselves, they really need to create something that is new and unique. They need to create new business models that take advantage of this change in distribution and change in access. We're going to see new financial instruments. The real estate platform that Tig mentioned, what was it called again?
Crowdly
token.
Yeah.
Yeah, they were basically saying that their real estate platform issues bonds which pay dividends. So whilst it may not have been the best execution of something, what we're kind of seeing is new financial instruments that have never been possible before starting to be created because the technology allows it. So, that's really what they're looking for. They're looking for businesses and entrepreneurs to start creating business models that have never existed before and are brand new for the launch of T0.
I have a question. Did you guys hear anything about Swarm while you were there at the conference? It seems like nobody has mentioned anything about it.
There was the only ICO, I call them an ICO type, whether they were or not, but a current blockchain type platform. The only one that they mentioned was Polymath, and they generally mentioned it in a general air of you really could have done it better. So I think it's almost like they were the first ones out of the trench. It doesn't mean they don't exist, but I think what that signifies to me is not necessarily that Swarm or any of these other ones is a bad model, but the focus of the STO industry at the moment truly is coming from we are closer to capital formation markets than we are to blockchain. So we are closer to VCs and investment banking formation markets than we are to blockchain. So we are closer to VCs and investment banking and traditional issuance than we are to the blockchain world. So I think that's probably a distinction that we really need to start building in is, whilst there are platforms out there that are based on blockchain, there's a whole series of risks that are associated with those type of projects, such as, no investment bank is ever going to buy Ethereum to go and buy Swarm. It's just not going to happen. They don't want to deal with wallets. They don't want to deal with the risk of sending funds to the wrong person. There's way too many user interface issues. There's just a whole series of things that are not present with the traditional equities market. And what they were basically saying is it needs to be as similar as possible to the traditional space. Otherwise, we're going to be waiting for decades. So I think whilst Swarm and Own and things will go through there will be a hype cycle for that. However, the investment banks who have the trillions are not going to touch it, not for a long time. So I think there's a whole series of risks that are associated with it that are not associated with equity, which is exactly why PrefLogic keeps hammering on the point. We did stock so that we kept our options open, and it gives us the biggest access point to the rest of the market. We can STO if we need to. We can keep our stock, but that's really the play. Fabian, yeah, I think there'll be stable coins. One of Saga is one of Spice VC's stable coins, which whilst I haven't looked into it, I think some kind of cryptographic token, which is stable, is essential for this thing to work. But I also think that it's quite a way down the list of important items compared to what we've got today in infrastructure. There's a whole series of exchange backends and clearing houses and all that kind of software, even a replacement for Ethereum. There's a whole lot that needs to go on before those things get issued and are of prime concern. Yeah, absolutely, Anne. They're the common theme was this is not for the rich. This is the complete opposite. This is to, we're trying to take the football away from the big player. So it's going to be a struggle, and this is where the regulation is going to be interesting because the investment banks are watching, and they're not just going to walk away from this whole thing. They're going to try and take as big a slice as they can. So it'll be interesting to see how that plays out, and that's where the concept of a fintech user comes in. So the more tokens so issuers and investors that a tokenee or a securitize or a PrefLogic has in their database, one of these big investment banks is going to fall behind. One of them is not going to build their STO division in time. These big investment banks is going to fall behind. One of them is not going to build their STO division in time, and eventually they're going to have to pay a premium to acquire one that's already in place. And that's a lot of the exit strategies for the PrefLogics and the Securitize and the Spice VCs. They're basically building platforms that have the technology, that have the backbone, that have the database full of fintech users, that when, let's just for argument's sake, say JP Morgan forgets that this space is going on, they've eventually got to go and buy one, and they're going to be buying it at the top dollar because everybody else will be doing the same thing. Fabian, it's a good question. It's very hard to tell which ones will exist. By the time this thing takes off, it'll be interesting to see whether we're still backing things to the United States dollar. So, whether we end up with a stable coin that maintains stability by some other mechanism, we'll have to wait and see. I think one thing that I've certainly taken away is, personally, I am decoupling my connection between the crypto world and the STO world, at least for the time being. They both face different risks. They're both facing very different markets. Whilst they will benefit from each other, yeah, exactly. I think they are indeed separate. The technology is there, but we are actually dealing with a capital formation system. We're not in the STO space. We are not dealing with Bitcoin. I kind of feel like Ethereum might be a bit of a placeholder. They're building the technology on Ethereum because that's what we currently have. I don't necessarily think it will be too hard to upend Ethereum should a better system come out. Ethereum just wasn't built for this. So whether Ethereum upgrades to the point where it is, or something else comes out to replace it, will remain to be seen. But at least for now, I think it's a good practice to try and separate them a little bit, and just take the fact that we're using distributed ledger technology to tokenize securities. But we are still dealing with securities. We're still dealing with companies. We're dealing with real estate. We're dealing with real-world assets that have traditional metrics. And all we're looking at the moment is the companies that facilitate this digitization, right? The companies that are basically going to profit by saying, get rid of your spreadsheets, here's a better system. Bitcoin, Ethereum, and Neo, they'll all bounce around and do their own thing. They're kind of a separate market in this regard, I think. So it's worth keeping that in the back of your mind. There could be connection down the line, but it's definitely too early to tell. And that's a question for Doc. I think it's until we see something turn around, it'll be we'll wait and see what Bitcoin ends up doing. Cryptomaniac, in terms of Neo, I've heard absolutely nothing in terms of Neo in the STO space. In fact, I've heard absolutely nothing from Neo. We were talking about that over lunch a couple of times, and there's I think the best thing to do with Neo is to just sit back and wait until Mav gets a chance to talk to Da Hongfei at the Neo DevCon. We really need to see a little bit more noise from Neo, because they're not making me overly excited based on their lack of development and lack of talking and investor updates and everything else. So I think just keep an eye on that space. I did hear something. Might have been that video you said, Bitcoin to 10 million. We'll wait and see. I'll be hanging on to one just in case. Jack, I think Ontology has they recently issued a security token offering framework. I do believe that Ontology has a little bit more development going on. I've heard rumors that a lot of the Neo developers shifted across, but again, I haven't done the backing to assess that. But I know that Ontology definitely does have a framework that they issued in the last couple of months about tokenizing real world assets. So at the very least, they are thinking about it. But really, I think what I took away from this is that the development of the public chains that we all know and love, they need to be integrated with this ecosystem, or they're going to get superseded. Ontology may be a bit different because they're Chinese, and as Tyg said, there's a whole market for China. But what I was hearing is that they're building this infrastructure today, and it's an ecosystem, and it all is codependent. The exchanges can't exist without the liquidity providers. The liquidity doesn't matter if there's no tokens there. The whole build this thing right the first time, and really actually working together to say, well, what's the best way we can achieve our end goal? Because if you stuff it up, it'll be game over. And I don't think at the moment, I'm not seeing Bitcoin having much influence on STOs. I don't think there's a great deal of connection there. The more I look at this, the more I'm starting to separate my crypto mind and my STO mind. I think the markets are very different. Yeah, Fabian, I think Onera is an interesting. I mean, it's the first one that I've seen that was built for or is being built for STOs. That's something I'm going to be looking into to see where that's heading, because that's an interesting platform. And there's a video on the front page of that side of Army, who's the bloke from Spice that we talked to. He's a pretty switched on dude, and it's a fairly good interview. And actually, there's a lot of information on STOs that's worth watching. On the drive recently, one of them was the CoinGecko 2018 report. I highly recommend to anybody that just wants a snapshot as to why STOs exist and where it's probably going. They did a pretty good job. It's a couple of really neat infographics. So I would recommend just having a look at that if you wanted just a snapshot as to how we got here. I think they did a good job.
Do you really think there's a possibility that it can get, as you say, stuffed up? And we've already have, like, say, small jurisdictions like, say, Liechtenstein and Malta kind of, working at this. I mean, is it really a possibility that that the world will get maybe fragmented and there'll be like different jurisdictions when you can't maybe trade across them, that type of thing? Or
I think national borders is going to be a challenge. They did mention a few times that you may have different countries who have different securities regulations. So there's going to be an interesting interplay between how all those different national regulators talk to each other. As with most things in the world, it's all solvable if you start talking. The problem is a lot of these people don't talk to each other. So I think it could become fragmented from a regulatory perspective. I think it's less likely, not impossible, but less likely to be fragmented from a technological standpoint, because if you think about this, if you've got three of the big players who know that you need to collaborate and a smaller player who forgets to collaborate, the smaller player will cease to exist, or they'll exist in a very niche market and they'll never quite catch up. So I think technologically there'll be a lot of similarities. I think it seemed to me that they were working together. Regulatory similarities are going to be harder to come by, because that's a whole different that they were working together. Regulatory similarities are going to be harder to come by, because that's a whole different level of politics.
We don't want to invest in Betamax instead of VHS.
Yeah, and I'm sure there'll be a few different Betamax this round. So how many of them and which ones emerge victorious, we'll have to wait and see. PBE, there's not sure who's going to be, but there'll definitely be that'll be a big part of it. I would be very surprised if it's someone like a quant stamp or anything like that. I imagine that there will be professional You know what? I imagine that you'll see Deloitte and KPMG and EY. I think that the accountants who are prone to being superseded by smart contracts for auditing things, they will probably be the pioneers who own the disruptor. So I'd be very surprised if they don't have a very keen eye looking at that.
At cutting through like the noise and getting straight to the nuts and bolts very clearly. So thanks.
Yeah, I think this conference was just great. I think what it did, it solidified that our thesis is correct. It's solidified that this is not a low-risk item. This is a high-risk space. There's a lot of existential risk. There's a decoupling of the crypto and the SGO space, and we are in the early days, something on the order of 2 to 3 years before this thing pops. But by all accounts, I mean, you look at the numbers of the value of the world that could be tokenized, and you just can't get your head around that many zeros. So it's going to take time. It's going to be hard. There's a lot of technical and regulatory challenges ahead. But if it works, it's not going to be something that will be forgotten. So I think that's kind of where my head's at.
Yeah.
In the interest of time, I think I might leave the section on fundamental analysis for next week, where we can kind of catch up and have Mav on the line and talk about that. But there's been a few people in my inbox just asking questions about how they get started with researching and actually getting involved in these things, and starting to understand more about Securitize and Spice and everything else. And I think if I was to summarize in one line what the approach is, it's to just start with a really broad brush. Don't go in there trying to read a white paper or a website and expecting to come out the other end knowing everything there is to know about the company. It doesn't work that way. Just go across and understand as much as you can, broad brush, get an idea, get a feel for things. You'll find that the more you dwell on it, the more sometimes you do your best thinking when you're not thinking about it. You'll wake up one morning and you'll have an idea, article, or you can go back and read the white paper or the investor presentations or whatever the particular site has. And it's a process of repetition. And even just being on Discord, the more that you guys expose yourself to these elements of research, the more they eventually just click into place. And you hear the same thing, you get repetition, and then when things stand out, you will notice them. And it will either stand out because you say, well, that's because it's rubbish, or it will stand out because it's actually something that, oh, wait, that's actually not a bad idea, or that's something that could be disruptive to the disruptor. So start small, start broad. You're not going to understand everything from day one, but you will on day 500, right? So just keep at it and do bits and pieces all the time. And sticking on this channel, I think, is the right place to be, because you just get that exposure every day to see how it's all coming together. All right, I think you just get that exposure every day to see how it's all coming together. All right, I think we're getting to the end of things. Thanks everyone for tuning in, and thanks Tig for kicking us off while I was having technical difficulties.
Yeah, thank you. I learned a lot from this. Just to reiterate, like speaking over it, like talking over something like that, it helps synthesize information. It helps make it real.
Absolutely.
And this talk did that for me.
Yeah, absolutely. And this is where I think these calls are important. Is just, I mean, when you start talking about these things, when you try and teach something, that's how you actually start to nail this thing in, and you learn the most by explaining. And in fact, all three of us were talking about this at when we were in London. We've already noted how much more conversation is going on by people asking questions and people answering each other on this, by just conversing and posing questions. So I think we're in the right place at the right time, guys. So keep at it.
Absolutely. Great days.
Good stuff. Thanks all, and